So sometimes I like to start off these videos with a question. The question tonight is, did you know that the e-commerce market cap was apparently at 3.356 billion? I think that's even in trillion. I think it's 3 trillion, over 3 trillion actually. That is such a huge number. But yeah, we talk about this because tonight, of course, we are looking at Shopify stock because I believe this one does have potential to potentially even 3 times in the next year or so. I'm going to be talking about why for the reasons which I'm going to state in this video. I'm going to talk about the benefits. We're going to take a minute to have a quick look at the future, some news which is relevant to the company, the actual business model, and a load of other key factors which you might want to know if you are looking to invest in this stock, or if you're looking to put this stock on your radar to potentially buy in the future. So if all that sounds like a good plan, please do like the video and subscribe. We're just going to check how many subscribers we are on right now. We are on 728. I think we might actually be on 729, and this is lacking a bit and lagging behind. But yeah, we are doing very well. Yep, 729, there we go. We're doing very well on the subscriber count, so thank you for that. If you guys could just, help by subscribing, massively appreciated. Obviously, we're trying to get to 1,000, and we are really, really close right now. On top of that, feel free to come and join us on Discord. The link is in the description. So just to summarize, that's all about stocks, Discord about stocks. And of course, we now have an Instagram, which is at Daily Trade Tips. If I can put that in the comments or in the description, I will leave a link to that as well. But yeah, we're just going to have a quick look at Shopify stock's pattern over the past, month and a few months, actually. So we're going to go out to the furthest point first. So when we look at the stock, we can see at the start of the 6-month period, we're on a price of $825. We're ending off the 6-month period on $988. So of course, we've made quite the big increase. However, it's important to note this increase has been very volatile. Obviously, we've seen a lot of ups and downs, a lot of drastic ups and downs as well. But yeah, we are looking like we are kind of leveling out right now. We saw a big dip towards the 9th, let's say, of November, and it looks like we are going back up now. Of course, it could come back down. There's no reason to say that it can't. But you could be asking yourself, is now a good time to buy Shopify stock? Because of course you could see it as a discounted price. So like I said, looking onto the 1-month chart, we can really see this redness coming in. It looks like it may be starting to balance out and go back up because we have seen 1 or 2 positive days in the past week or so, maybe even a bit more than that. So let's look into the 5-day. Yep, the whole week is positive, which is a good thing to see. Looks like the stock is trending up strongly. But of course, if we are looking to buy this stock, we could do a trade on it, if we wanted to, but in my opinion, this would be more of a hold stock. It's not the kind of thing that you buy and sell a few weeks later, because in my opinion, it's not that kind of stock when it comes to profit, because of course, yes, this is going to be a growth stock for years to come, but in my opinion, it's not one of those which is going to make a huge profit overnight. That doesn't mean that you should not invest in it though, as we are going to have a quick look on Google Images, because I found this very nice graph which basically shows us the expected growth for the next few years of this business style, basically e-commerce, business to business. So of course 2016 was a start year. Right now we're in 2020, but if we have a quick look, this market sector is expected to grow drastically towards 2027. I'm thinking that looks like 2 or 3 times what it already is, and potentially even higher after that. So obviously what we can determine from this is, if we are going to buy this stock, we're going to see probably stable, but long-term growth. If we do decide to buy in, it's not really going to be one of those that's going to make us a huge amount of money overnight, but it is still going to be a very safe and very good investment. So like I said, sometimes it is important to have a look at the business model to help us understand why people are trying to buy this stock. And I think one of the reasons why this stock is going up so well is because of what the actual company does, and the benefits of using this model. So of course, we are looking at this article on v8media.com. .co.uk even, sorry, and this is talking about 10 benefits of e-commerce, and I'm going to be explaining each one of these to you and why they are beneficial and why this means that the market sector as a general whole is going to increase further into the future. So first one is, e-commerce allows a business to reach a wider range of customers. This is simply because with a shop, you are kind of limited to the amount of people that you can sell to. For example, if I set up a shop in a city centre and somebody's on the outskirts, it's going to be quite hard for them to get into that city centre to shop for the thing. And even if they can do it, they may not want to do that. Obviously, being able to do it from the comfort of your own home, it just makes things a lot easier. And let's face it, okay, a lot of people are lazy. They don't like going to the shops, and honestly, I don't blame them. But I think that is one of the reasons why this business model as a whole and subsequently Shopify is going to do well. Again, subsequently from the first factor, they can gain new customers more easily because obviously you have these search engines. It's not a case of you have to be in a certain location to go to a physical shop. You can, just shop from the comfort of your sofa. It's easy to find shops online rather than go in store, but it just makes things a lot easier for customers. And of course, what business models where the customer is kind of prioritized, generally speaking, do well. I mean, look at Amazon. Look at what Jeff Bezos was saying back in like 1999 or something when he was saying that he was going to put the customers first. And now look at Amazon. Amazon's like the one when we think of e-commerce. We think of stocks like Tesla when we think of electric cars. When we think of e-commerce, we think of things like Amazon. Shopify is up there though, but Amazon is just the big one. There's always going to be a big one, and that is Amazon right now. So yeah, not getting off topic, it is easy for the customers to use. This is what I just said, because it's online shopping, it's easier, it's quicker, it's more convenient, it's lower cost for the business to actually produce because, with a physical store, you have to have overheads for things like rent and whatnot, whereas all of the amount of things which you will have to pay for in a traditional store, a lot of them are eradicated with an online store, so it's a lot easier to work for the customers and also for the people who are owning the business. It also allows for an increased product range because you can basically promote more products than you could traditionally in a shop, because once again, a traditional shop, you're limited to the amount of things which you can fit in the store, whereas online, you can just order them in when they are flying off the shelves and whatnot, and not necessarily have to worry about a space to store them. So yeah, it also allows for additional product information. Obviously, we could do this in a shop where we could just Google it whilst we are in the shop and looking to buy it. But obviously, it's a lot easier to do whilst you are already on your sofa because you're already on Google or whatnot. You can just Google it, find out more information. Simple. It's also easy to track for the businesses. So this one's kind of working out more for the businesses because obviously, this is kind of similar to how it is on YouTube for me. I can see what you guys are liking. See what's doing well, see what's not doing well, and then I can produce more of that. The same goes for an online Shopify store or any e-commerce store. Obviously, they see what's doing well, they buy more of it, and then they sell more of that subsequently. And it's just easy to monitor stock because everything is laid out very nicely in these business models. So yeah, there are some benefits of the actual business model. Let's have a quick look at their Q3 earnings, which were out very recently, and they were actually positive once again. So it looks like they have been positive for the full year, all the way back from Q4 2019. Obviously, we get in the next quarter coming out relatively soon because December's almost here. Then we'll get the results for the whole year. But yeah, we can see it was a surprise of 123% when we look at the EPS. It was expected to be $0.51 or 51 cents. It was actually $1.13. So obviously not bad. It's obviously double what was expected, and that shows in the surprise result. So yeah, let's have a look at revenue figures. It was expected to be around 657.92 million for this quarter. It actually came out as 767.4 million, which is obviously better than expected. It's also very close to $1 billion for one quarter. Nice to see. And it was a surprise of positive 16.64%. So obviously the company is doing well for the current quarter and has been for the last 4 quarters, with all of those being green. Let's have a quick look at what our analysts are saying on money.cnn.com. Obviously that is CNN Business, and of course they do, well, these are the companies which we do use to have a quick look at what the analysts are saying and whether you should buy the stock based on their opinions. So of course this is coming from CNN's analysts. We have 28 of them this time. I'm going to be explaining what everything's going to mean in just a moment. So yeah, there's 28 analysts which are offering a 12-month price forecast for Shopify Inc. They have a high estimate of $1,400, a median target of $1,175, and a low of $550. The median represents a 18.87% increase from the last price of $988.50. Alright then, I'm going to explain everything which you need to know right here. So basically the one in the middle is what is considered to be the fair estimate. Obviously, being the median is kind of like the one in the middle. It's the majority vote kind of. Obviously when you take the highest away from the lowest, you get the median, and the median is positive this time. So it's about 20%, which is good growth for a stock. Obviously analysts have been wrong in the past, but you know how these things go. This is just what they are saying. They have a high estimate for the next year of 41%, bringing the stock up to $1,400. They have a low of -44%, bringing the stock down to $550. In my opinion, I would say the low is actually too low, but one thing I think could push the high higher if they would just do this. They have not done it yet, and I don't think it's even been announced, but if they could split this stock to a lot cheaper of a price, I think they'd be doing a much better thing, because obviously we all know the benefits of splitting a stock. It makes it more accessible to people because it's cheaper, you get more investors, it's less risky, all of these benefits. If they could just split the stock, I think we could be looking at some big growth. Obviously, that's not been announced, but if that does come in the next year or so, I think we could see even steeper growth on the company. So another thing which I want to talk about is the buy rating, which is down here. So this time we have 34 analysts which have been polled, and these are saying, generally speaking, you should hold the stock. This rating has steadily held since November, when it was unchanged from a hold rating. So once again, I'm going to explain everything on screen. Let's have a quick look at this. So we have 16 of the 38 analysts which are saying you should hold the stock currently. So obviously the majority of these people, only by 2 though, are saying that a stock is going to do well, and not necessarily buy the stock if you don't already have it. But if you do have it, don't sell it right now. Don't worry, it will probably be fine. So you have 2 analysts which are saying that the stock is going to outperform what is expected of it and do very well. Of course, that's only 2 of them saying that, but it still does count. The second largest portion are saying that you should directly just go out and buy the stock, saying that it's going to do well into the future. This looks like it has increased since the previous week in October, where the majority, by less than 1, I think, was saying that you should perhaps maybe hold rather than buy. But yeah, looking down to the other side, we have underperformed. So one person is saying that the stock is going to underperform, do worse than expected, and another is saying that you should directly sell. But let's just have a quick look. So for the weighting point, this is mostly weighted on a positive rate, saying that you should potentially or probably buy the stock according to their analysts, but that is just what they are saying. So of course, we're going to have a quick look down here at some figures. So this is reported on the 17th of February, apparently. I don't know why, but there we go. This is talking about the earnings per share, and it also gives us a decent forecast on what is expected for the future. So yeah, they're saying, the analysts that is, the analysts say that the stock is going to continue to do well in terms of the earnings per share. It's apparently going to do well into 2021, perhaps, and also that the revenue figures are going to increase steadily as well, which is going to be good to see if that one does play out. Hopefully it does. It has played out for the previous year or so, and I think that this one does have massive potential, whether it's from the personal business point of view, or whether it's from the whole market sector. The market sector is growing, and Shopify is, generally speaking, one of those names which is getting bigger, in my opinion. It's kind of like one of the bigger ones. Obviously it's no Amazon, but it's one of the ones which I personally think of when we think e-commerce. I'm sure if you guys have looked into making money online, a lot of people do talk about these e-commerce stores, and yeah, e-commerce is a big market sector, up and coming. I think this is something which we have not really seen too much of in the past. Obviously, we have seen e-commerce businesses in the past in general, but we've not really seen too many of them. So I wouldn't say the market is oversaturated, and I would say there is still room for growth in all companies. So yeah, will this stock do 3 times the price that it's at now? Come and tell us on Discord. Feel free to. I hope you did enjoy the video. If you did, please do leave a like and subscribe. I will see you in the next one. Thank you for your time. Goodbye.